2.5 days, but we'll try to squeeze in as much as we can. If not, we're hosting an event, so we'd love to see everyone or most of everyone there.
Yeah, sounds cool. Right. I think we're gonna give it a bit more time, for people to join in, and then we can
Sure.
just start the session. Yeah, I think for next week. So for those of you here who haven't heard about it, we have a conference called Build Vietnam from the 16th to 17th of June. So we are having quite a few exciting sessions, and also great speakers like Brian, and great lineups coming to Ho Chi Minh City, and also there are like 12, 13 side events as well around the conference. Not too many, but I guess you will have a lot of time to catch up with some of these, like, I think really exciting projects. So we have featured Mina, also zkLend, Starknet as well. So quite a few opportunities for you to catch up with, the Web3 folks coming from all over to Saigon. And we're gonna co-host a meetup on the 16th as well at a very nice rooftop bar in Ho Chi Minh City. On the 16th night, we're gonna blast it out so you guys can join us for the event. Yeah, I hope that I don't miss anything, but I guess this next week is gonna be very busy in Ho Chi Minh, and for you guys to join in. Maybe we can just kickstart by a simple intro, of each of the speakers and our co-hosts. Maybe Brian, do you want to start first?
Yeah, sure, of course. Hi everyone. Very, very glad to have the opportunity to come on to the APAC DAO AMA, also hosted by ABC Station, as part of the Build Vietnam 2023 series. Good evening, everyone. I suppose everyone it's around the Southeast Asian time. I'm Brian, one of the co-founders for zkLend. For myself, I actually started zkLend with two other co-founders, Jane and Jonathan, in 2021, the late 2021. And prior to that, I have been working in the financial industry for a very long time. I started my career in investment banking in Hong Kong did that for about 7 years. And then I moved to private equity on the buy side for another 6 years before I threw in the gloves and then really want to start something in the Web3 space. And basically, that's how the origin story started. Let me pass it back on to you first, Nicole, and then I'll talk more a bit about zkLend and the origin story a little bit more later.
Sure. Of course, we have time. I would like to invite our co-host as well, Manh, to introduce himself, and then we can just kickstart the session.
Yeah, hi everyone. Yeah, allow me to introduce myself. My name is Manh, and I'm currently a director of a division at DirectorSotatek, and I actually work at the tech industry for almost 10 years, and for the last 4 years, I dedicated focus on blockchain only. And about Sotatek, Sotatek is a leading Web3 company in the region, which currently houses over 1,000 employees, and we are the development partner for so many blockchain foundations and projects all over the world. And yeah, we also have to develop and incubate many projects coming out from Vietnam. Yeah, that's it. Thank you.
So hi everyone, my name is Nicole. I'm from APAC DAO and also one of the co-hosts today. Such a pleasure to have you guys here with us today, and also Brian coming all the way from Hong Kong, joining us virtually. So we're gonna have like a very straightforward kind of flow of the AMA today. We're gonna kickstart with the intro about zkLend from Brian, and then we're gonna go straight into the AMA between Manh and Brian before we open the floor for you to drop any questions to the speakers. In the meantime, if you have anything that you want to share with the speaker, or if you have any questions, feel free to drop in the chat box here, and we would collect your questions and pose it to Brian afterwards. So yeah, now Brian, the stage is yours.
Thank you, Nicole. Let me first share my screen so that I can go along with the presentation as we go. Is this coming through all right for you guys? Perfect. So a little bit about zkLend. zkLend is a money market protocol built on Starknet. It's like money market protocol, meaning it's a lending and borrowing platform very similar to Aave compound, Eulers, Goldfinch, with a little bit of a twist where we actually have two products under zkLend. One is for retail users, decentralized, permissionless, and another one is catered for institution where it's still decentralized, but we have to go through a KYC process, and the borrowing and lending have to go through a under collateralized lending, so that there will be some form of KYC, some form of compliance layering before actually being able to get onboarded. But before I actually start talking about zkLend and what it is about, it also makes sense for me to take a little bit of detour to talk to you all about a little bit about Starknet and what it is, and being able to understand the technology behind it actually helps to set the stage for why we want to build on Starknet, and also what actual capabilities it enable us to do. So with that, let me get started. It's a very, very fundamental slide. I think a lot of you actually know this by heart already, but because I want to talk about layer 2 and Starknet, I will start with this very much repeated slide, which is the blockchain trilemma. And every one of you might have already heard it 1,000 times, that there are three fundamental pillars for a blockchain design, which is decentralized, secured, and also scalability. And no blockchain at this stage right now are able to achieve all three in a perfect sense. What I mean by that, for example, is we see chains like Solana, they are very, very fast, but they lack the decentralized component of it. So then sometimes when their main computer gets shut down, there is outage event that happens day in, day out. And there's, on the other hand, where you have Ethereum. It is decentralized, it is secured, but it is not scalable because it sets the requirement for each of the validators to be very low, so that for doing high amount of transactions, high volume on transactions, the cost becomes really high, and then the TPS drops to a very, very low number. And it was around 2021 December that Vitalik actually posts out an article called The End Game that talks about Ethereum and how to bring Ethereum to its finality states. And layer 2, it's the key component of it. And what layer 2 actually means, it's a modular architecture that actually helps separate the three core functions of a blockchain and basically take one out, so then you would be able to focus on it on another layer 2 or a separate blockchain, and then being able to do the remaining at a much faster speed. And in this case, the layer 2 specifically is talking about transaction executions, and that's what Starknet is all about. Stepping back a little bit further, we have ZK proof, zero knowledge proof. For those of you who don't understand what ZK proof is, I have a very simple example. For ZK proof, you need three components. There is the statement to be proven. There is the prover that actually needs to compute a proof to convince the third party, the verifier, that they actually know the statement is true. And the verifier at the very end, it's to validate the proof, and then they would say that, okay, the statement is true or false. And one more visualized example I would like to use for this ZK proof would be, let's say I want to tell you that I possess the key of this house, but I don't want to show you the key. I don't want you to actually know what the key is like. So the prover would actually compute a lot of proof. For example, they could ask me about all the properties inside the house. For example, it's a couch red or brown? It's the kitchen on the left side, right side? They would ask me a lot of questions, and I would be able to answer it because I have the key. I can go in, pop into the house, check it, and then being able to answer the questions. The more question I answer correctly basically improves the certainty. And the verifier at the end would be able to trust that, okay, I have asked 1,000 questions. They have Brian has answered this 1,000 questions correctly, which means he actually does have the key to go inside the house. So I don't have to see the key. I know he has the key. So that's kind of what zero knowledge proof is about. It just keeps on going into proving it and eliminating the error of the margin of error. And in Starknet context, you can see on the right side, the actual proof itself, it's not so much similar to the question being asked, for example, the property in the house, but it's actually what they call a polynomial encryption. And using a polynomial, so the construct is very similar to a Sudoku-like puzzle. So the prover will generate a Sudoku puzzle, and to do that, they actually need a very powerful computer. So once they generate the proof, they would pass it on to the verifier. The verifier would have to, basically, these are validators on layer 1. They only have to check a very small subset of these Sotuku, so then they can check, okay, if I check 3 numbers and they make sense, I would say the statement is true. And then they will continue checking it until the margin of error becomes very, very small. And one fundamental principle for statistics and polling is that if you, for example, have 6 different variables, 6 different constraints, and the verifier are able to test it many, many times, your probability for error actually goes down to at most 1 in a trillion, and that's 0.0000 or 11 0 and then 1%. So basically, you're almost near certainty in terms of proving that the statement is true. So in a sense that for Starknet architecture, on top of the 3 components, the proof itself, the prover, and also the verifier, there are 5 key components that deals with Starknet infrastructure. The first one is the sequencer. Second one is the prover, or they call it the share prover, so they call it sharp. And then the third one is the verifier. Fourth one is Starknet. I won't go through sequencer and the prover because I'll explain in slides. But verifier, basically, these are just validators on L1 that verifies the proof to be true. Once they verify it, it will be embedded as one of the states in the Ethereum layer blockchain. So then that's why we call the layer 2 would have the same consensus and also the same security properties of the underlying network, which is Ethereum. Starknet Core is a L1 smart contract, layer 1 smart contract, which store all the state changes or the state diff for L2 global states. And for the last one, it's full node. The full node actually helps to provide the state data for each of the L2 applications. So for sequencer basically what it is an entity which aggregate different transactions. It processes transactions and produce a block on layer 2. And this basically it's similar to validators on the Ethereum, but what it does is basically it does all the transactions computations on layer 2. You have a sequencer, put it into block, then the block will be posted to the prover to be proven afterwards. And you see this crazy picture on the right side, Madara, because there is currently only one sequencer on Starknet. But the thing is, I actually, this is one of the quick thing about the Starknet ecosystem. It's that because a lot of devs, they are drawn in by talent, they're drawn by the challenge that Starknet and the Cairo code offers them. So a lot of them actually just as a side project, they started this Madara project, and it's a Starknet sequencer on a substrate framework. And what that means is you're able to create your own customized sequencer, and you're able to create your own private Starknet or customized Starknet as a result. When I say that there's only one Starknet at the moment, but very soon there will be a lot more customized Starknet sequencer that users or developers can use, and that will be able to process and arrange transactions in a much faster, much more efficient way. Now for prover itself, it's an entity which receives the block from the sequencer. They would process the block, and then they would generate a proof, which is the Sudoku-like proof, to pass to layer 1 Ethereum, and then for layer 1 Ethereum validators to verify the proof and to put it into the ledger or the blockchain database. The prover itself has a very high machine requirement because it has to do a lot of computations to combine and basically generate a proof of the underlying transactions. The good thing about the prover is that each of these proofs can be done in a separate, smaller proof. There's parallelization in proving, and there's also recursive proving. So then these proving does not have to take place all at once. So on the diagram to the right, what I'm trying to say is that, for example, we have transaction 1, 2, 3, 4, and then we'll create a proof 1, 2, 3, 4. But these proofs, you can actually combine proof 1 and 2 to have proof 1, 2. And then you can have the proof 1, 2 wait until transaction 3 and 4 combine, and then they would create proof 3 and 4, and then they will create proof 3, 4, and then you will be able to basically recursively combine these together and breaking a much larger. problem. So this is the power of the prover, and being able to run in parallel and recursively actually helps solve a lot of the computation limitations for each block. So on Starknet, the lifecycle, transaction lifecycle actually starts from a user and also sequencer side. So when the user wants to do a transaction, the user account, basically it's a wallet. They would initiate a transaction. Transactions would go through the sequencer. The sequencer would basically see if there are still space in the block that it's being shipped out to the prover. If there's still space, then the transactions would go to a validate announce. Once announced it's valid, then they will go and then go through to see whether the transaction is valid. And if the transaction is valid, then the user will execute the transactions on their wallet. And when it's execute transactions successfully, then the transactions will be added to the next to the previous block, and the cycle keeps on going until that block is being completed or being filled. And once it's being filled, then you would move that block to the prover, and the prover will generate a proof, and that proof will get sent to layer 1. So in that sense, it's basically similar to a transaction taking taxi or a transaction going through by a bus. Currently, there are 4 different status being shown on start scan when you do a transaction on Starknet. The first one is not received, but usually you won't see that at all, because as soon as you process the transactions, it would have been notified to the sequencer. So the first state you would actually see it's closer to the receive. Once the transaction is being received, it means that the transaction is being queued by the sequencer and will be executed by the sequencer into the next block. And then once the transaction is being aligned for the next block, it will go through the execution of it. If it executes correctly, then that would be added to the block. And if it's failed to execute correctly, actually for the next version coming out for Starknet, it would still be added to the block, and transaction fee will still be added to it. The previous version of Starknet, they're not able to handle failed transactions, and actually that's a shortcoming for the code itself, because this open a denial of service attack, or for example, when you have large number of failed transactions, but they aren't causing any transaction fees, then you would actually jam the network and then not being able to process actual valid transactions and able to charge a fee on it. And the fourth state, assuming reject, it's not a state itself, the fourth status would be accepted on layer 2. Accepted on layer 2, actually, it's the same thing as being in pending mode. But what it means is basically you would have to guarantee that this would go into the L2 block, the next L2 block. And then you would more or less get confirmation that the transaction will go into the block, and then it will get processed and it will get executed. And the final state is the transaction get accepted on chain on Ethereum. So this basically able to see this when you do a transactions on Starknet, and then you go to the start scan or Voyager, you would be able to see these accepted on layer 2 and accepted on layer 1 actually takes, I would say, more than about 15 minutes or so. It really depends on how quick a block is actually being shipped. I think where they're looking at making this more flexible, so then you will be able to do a block at a much closer time frame. So you would be able to do transactions quickly, but each of the blocks would be including less transactions, so the transaction cost itself might be slightly higher. The flow of going from L2 to L1, it's very similar to what I explained previously. So the users, they would go to the application, they would execute it, and then they would send a transaction to the sequencer. The sequencer would process the transactions, put it into a block, and then batch it together and send it to the prover. The prover would generate the proof to be verified on layer 1. And this state update is actually a very important component of the whole Starknet layer 2 construct. With this state update or state diff, even if, for example, the prover itself at one point, because we only have one prover or one sequencer at the moment, if it fails to produce a proof, or anything shuts down, this becomes the escape hash where you're able to compare the Merkle tree roots with the actual state on Starknet and being able to trace back your transactions and get your money back. So this is what the layer 2 they refer it as the escape hash to get the money back. So jumping a little bit forward now. So for zkLend, we are a money market protocol built on Starknet, and we leverage on Starknet zk rollup scalability and speed and transaction cost advantages to do DeFi transactions in a much intuitive and efficient manner. And like I said previously, for zkLend, under the brand itself, we have 2 different products. The first one being Artemis, or we just call it zkLend. And then the other one is Apollo, which is catered for institutions. And that one is zkLend Institutions. In a nutshell, our protocol actually contains 4 different smart contracts. The core smart contract would be the market smart contract. What it does is it takes in the instruction from the user. The user would have a transaction request through the different wallets, through Bravo, through Arginex, and then it would interact with the market smart contract. And the market smart contract will do 3 things. For example, if it's a deposit transaction where users deposit, let's say, at 100 USDC and then get a yield from it, what they would do is they would, one, get a pricing oracle to get what kind of price would USDC represents. It may not be your USDC at one point. It could be ETH, it could be BTC, it could be other currency later on that you deposit. And then the price oracle will basically trace what the amount, what the value of the deposit you're being put in, and how much you're able to use this deposit as collateral for lending later on, for borrowing later on. I'm sorry. And then secondly, it will check the interest rate model. The interest rate model basically takes on 3 factors. One is the utilization rate of the specific currency. The second one is taking in what is the curve of the interest rate at that given utilization. And then thirdly, it's what is the asset itself, and then it would change the different curve slope as well. So with all those 3, we would generate what would be the instantaneous interest rate at that moment when the transaction is being called. And when all these 2 transactions go through for price oracle and also interest rate model, then the last one is it would mint a C tokens. So for example, with the same example is we deposit 100 USDC, you actually will get back 100 USDC C token. C token, and what that is, it's a receipt of your deposit, and then it is with this C tokens, you will be able to use that for as security for your lending. And as soon as, for example, you withdraw your deposit, this C tokens will get burned. And the C token is also a mechanism that actually helps track how much interest rate you'll be getting for the entire period of your deposit. So for our protocol itself, zkLend Mainnet Alpha was launched in May 2023. So it was launched about a month ago. And currently we have a TVL of close to about 1 million. It hovers around that point. It seems relatively low compared to some of the other lending protocol, but we have to take into account 2 things. One, it's Starknet, it's also in its alpha state. So the entire TVL on Starknet, it's about 50 odd million. And for us getting a 1 million transactions deposit and about 200K of borrowing, actually it's taking up close to 1/10 of the actual movable TVL across Starknet. And also because we're on own alpha state, we actually put in a borrowing cap so that we don't want the deposits and all too quickly, so that we're able to manage the growth and also manage the risk component of it before we actually start gradually removing some of the caps and also increasing the borrowing and lending as we go. For the Artemis roadmap, it actually started by March last year. we complete our fundraising in March 2022, and during that time, we already start putting together the team, and we start building around late Q1. And our first testnet was already live in August 2022. And then we had a moon landing campaign for different users to come on to try it out and give us feedback. And at the time, I think we received over 1,000 feedbacks, and some are about the bugs, some are about UX UI, and some about the preference of what would make the transactions more useful, more handy for them. And it was a very humbling experience because we actually have a lot of very helpful feedback from the community, from ecosystem developers. And so throughout the past 6 months, we have been in-house improving on some of these points and also completing our auditing for the code itself. So right now, the zkLend mainnet alpha is actually audited by two audit firms. One is Manh, the other one is ABDK. And we have launched our mainnet alpha in Q2 2023, and going forward to about Q3, Q4 2023, we are expected to have our mainnet actual version coming out with full-fledged features. The second side of the protocol is the institutional part of it. The institutional part of it, it's very similar to Artemis in terms of the construct, but it includes two other components, which is the KYC compliant layering and also a FDD for going to come on. So we have to check their off-chain financials and on-chain wallet address activity so that we get comfortable and also give lenders the comfort to lend to these borrowers. For us, the development roadmap for Apollo is actually slightly later than Artemis, and it's by design because we want to focus on launching out the permissionless protocol before we focus on building out the institutional part of it. And for the remaining of this year, we're starting to have different conversation and sign LOIs with some of our launch partners, some institutions or investors that want to basically be the first user or first provider of capital for Apollo. Our testnet is expected to come on around Q1 next year. And with further refinement, it would take probably another 3 to 4 months. And our mainnet, it's expected to come out around Q2, Q3 next year. So that concludes the main presentation part of what I want to go through for Starknet and also for zkLend, and would happy to take any questions from Manh and also from the community about specific things about the project or Starknet as a whole. Thank you.
Yeah, thanks, Brian. Yeah, it's a great presentation, and congratulate you and the team for building the zkLend. And I love this example of zkCool for zk proof system. It is really great, easy to understand, and also the material from Naruto as well. Yeah, and your presentation is very technical in depth, and I believe that you can help me to answer the following questions that also relate to tech as well. Yeah, and from understanding, your starting point is about scaling, right? You mean that we are the money market that want to take the advantages of the scaling from layer 2 compared to layer 1.
Yeah,
it's all about the cost and the cost saving and the speed. So there's a lot of layer 2 out there. So why Starknet? I mean, why zk rollups compared to like a optimistic rollup, and why Starknet, for example?
Sure. So for us, we had a look over a lot of different blockchains when we first started, and we have two principles that we believed in. One is layer 2. I should start it. One is we felt that Ethereum is going to be the chain to go to for doing DeFi transactions. We do see that, for example, Solana, they have a very good NFT community, and then Avalanche, they have really good payments and also exchanges, they have very good payments and also exchanges and lending protocols usage as well because they're really fast. But for us, we felt that because we want to ultimately tackle institutions where they would value things like decentralization, and they would value things like security and also the certainty of transactions. So we felt that Ethereum, it's a chain that we want to build on if we want to build a DeFi protocol. So when we look at Ethereum, the one weakness they have is the scalability. But around the time when we started the project, it was when Vitalik came up with the Endgame article, and we felt that it was a really good finality that we want to see through. And at the time, a lot of layer twos are almost coming out with the testnet, or they just finished the testnet and coming out with the mainnet alpha. So at the time, we actually do have looked across different different roll-up as well. So you mentioned, let's say, optimistic roll-up and CK roll-up. Optimistic roll-up, it's good, and it's having a very fast ramp-up speed. And we also seen that, for example, Arbitrum and Optimism, they have performed phenomenally and with a very high volume for the past 6 months, and Optimism for the past 8 months, let's say. But one critical feature that optimistic roll-up will not be able to meet our requirement is that they are assuming that there is one honest player within the validation process. So what it means is, for optimistic rollup, there is a 7-day dispute period, and for each validators, they are able to basically go and challenge transactions that have been put through. And if there is a fault, then basically it's similar to a proof of stake, where the validators that actually process the faulty transactions will get slashed, and you would be able to keep the network safe this way. But if you're thinking about DeFi protocol, and if you're talking about institutions with high amount of notionals being transacted each time, having that 7 days finality, it's not something that it's feasible, because that actually exposed the network to a lot of risk, and with higher amount of transactions and higher value transactions at the time, it actually increased the risk of being attacked and the risk of having a 51% attack for these network. So for us, CK rollup, it's elegant in the way that it's proven by math itself and not by trust across different validators. So I think that was kind of the first part of the question: why CK rollup? And of the CK rollup that are available, we chose Starknet. It's because of 3 things. One is we felt that the management team execution ability is very, very good. They have done the CK Cash. I mean, they are previous founder of CK Cash, CK Cash, and they have actually launched a StartX project prior to Starknet. And the StartX actually is being adopted by some of the most reputable protocol like DYDX, Solware, Immutable, and they have processed millions and billions of transactions already. So we felt that there is a very good probability that they will come through and being able to produce a composable layer 2 that it's workable for a DeFi protocol. Second, it's because Starknet uses Cairo, it actually opens up a lot of different new ideas and new innovations. And even though right now, I think the development speed is still quite slow because it's building in Cairo and they have to do the Cairo upgrades. But ultimately, I think Cairo is better suited for CK circuit. And down the road, we are able to see a lot more innovations, a lot more new types of protocol being built. And us being a DeFi Lego piece, we want to build on a network that has the most potential and most innovations. And I think the last part of it is because Starknet has a very good ecosystem. So then when we first started, there weren't a lot of protocols being built on it. The infrastructure is not there. But very quickly, we see that, for example, Madara is a project that are self-funded and self-built by some of the developers in the ecosystem. And also there's Kakarot, that it's a CK EVM project that is being built by some of the developers advocates as well. So the speed of innovation is actually, and the help you can actually get from the Starknet ecosystem is a lot more in-depth and a lot more handy in terms of how you want to build your project, and there will be assistance as to how you can better build your product and being able to get the resources and assistance needed. So that is kind of the three core reasons why we chose Starknet, and we felt that it was a good bet, and we still believe it is the right way to go.
Yeah, thanks, Brian. Strongly agree on all points actually. And in fact, I'm a big fan of Starkware actually, because zk Stark was actually invented by Starkware. And as you just said, that the co-founder of Starkware was also he's a founding scientist of the Zcash. We all know what Zcash, right? He is kind of a pioneer in a zk proof actually, and I have so much respect. So yeah, I can understand why you choose .NET. And yeah, no, just the setup required and the resistance. You just mentioned about the resistance of quantum computer is a very, very important point. Yeah, and I can agree with you more about it. But because easy, you need to write your smart contract on Cairo, right? Why
Correct.
why do you choose any kind of zk EVM or easier to write smart contract?
Yep. I think you mentioned a very good point too, about Stark being quantum resistance. I think there are previously last year there weren't too many options. There were Starknet, there was zk Sync, and then I think Scroll was I think they're still under development. Polygon, we know they're doing something zk related, but there was no news of it. So at the time, I think there was only zk Sync, Starknet, pretty much. And right now we do have a lot more different options. And also, for example, Linea, it's also from Consensus, also pushing out another zk EVM as well. But for us, if we look at the zk EVM and non-zk EVM, zk EVM actually has 4 types too, type 1 to type 4. Type 1 is basically meaning that it's closest compatible to EVM machine, or EVM. So this requires the least amount of code rewriting and a custom code or precompiled library. But because Solidity it's not made for zk circuits, their computation speed is actually very, very slow. And on the flip side, you would have zk type 4 zk EVM, and that will include guys like zk Sync. And what that means is the compatibility with the type 4 to zk EVM to EVM itself, it's not so much anymore. And I would say zk Sync is also very similar to Starknet in a sense that they are standing towards doing something that is not so much compatible with EVM, but they would sacrifice that but improve on speed itself. So that comes to the question that why we choose Starknet. It's, I think, one why we choose Starknet and also willing to write in Cairo. It's because at the very beginning of the whole thing, we understand that Cairo is built specifically for zk circuits, and it has the ability to resolve a lot of the barriers that Solidity will encounter. And at the time, it was a very difficult process for our developer and a tech team to actually pick up Cairo, because Cairo itself is relatively low language. It's not fleshed out. A lot of, for example, at the early days, even Boolean expression, it's not being included. So a lot of the writing actually there's no map library as well. For example, if you want to add, subtract, multiply, divide, you actually have to write the actual mathematical logic yourself. But we see that right now with the Cairo 1 upgrade, it's going closer to the Rust-like syntax, and we felt that Cairo is becoming a much more dev-friendly language for developer to pick up, and secondly, it's a language that does not have to have the same barrier that Solidity would have, and it's a Turing complete language, so that for us to be able to do everything in Cairo, for us to replicate the same thing in Solidity will not be something that's too difficult. So for us, we do want to start with something that is uniquely more difficult and more have a higher return in the future for us to get into. So even though Cairo it's not something that a lot of developers would know at the get-go. We felt that the ecosystem and also our team is getting more and more competent in writing the language and being able to get resources needed to advance in it.
Yeah. Thanks, Brian. And yeah, for all the audience that about the zk EVM, we, as Brian just mentioned, we have 4 types of zk EVM, type 1, 2, 3, and 4, and the EVM in Ethereum itself was not originally designed to be zk friendly, so it's really hard to write a circuit that support every opcode of EVM. So it's for the zk EVM type 1 is fully compatible with the EVM, of course, but it is a slow one. It doesn't match the requirement of scaling. That's why there's no protocol that actually implemented it now. And more of protocol that we can see in the market now is at the type 4 or type 3. And by cutting out some opcode that is really hard to deal with, we are all want to become a type 2. But the closer we get, the less efficient that scaling is. But there's a good news that Ethereum just have a roadmap to change itself to become more suitable for zk, making Ethereum basically become a type 1. And in the future, it will be easier to get closer to EVM. But for now, currently, because we are targeting to the scaling efficiency, so it's a trade-off. We need to learn how to live without EVM to achieve the requirement of the speed and the cost saving for now.
Yeah, that's a very good point. I think what I want to also add in it's for the type 1 to type 4 or even non-zk EVM, there are no winners or losers. I think it's based on the application of what you're trying to do. So for a general composable layer, I think type 4 or non-zk EVM will win. But if you're only looking at a very subset of transactions or only want to do certain amount of transactions, I think maybe type 1 or type 2 would be something you want to do. So it's really depending on the how you want to set up the custom of or the specification of your protocol, and then you will want to choose which type of zk EVM or non-zk EVM you want to build on.
Yeah. And speaking of Starknet, I believe that for who are following Starknet, we are preparing for the next big things. It is called regenesis, right? And all the smart contract in Cairo 0 need to be migrated to Cairo 1. And how does that affect you guys? How far you are ready for the regenesis?
Sure. Our current mainnet alpha is written in Cairo 0, so we also need to go through a rewriting process for Cairo 1 and get that re-audit as well. We are currently starting the rewriting of Cairo 1, and our target date for having the code audit would be around early to mid-July. So the auditing would take about a month or less. So we should expect the code to be ready around August time, and that would align quite nicely with the regenesis around end of Q3 or Q4. And when our code is audited, and then we would launch our Cairo 1 mainnet version coming out, and then that would also include quite a few new features, for example, staking, TVL locking, and those would be included, and also isolated pools, which would be able to support other Starknet tokens in a isolated environment.
Yeah. Sound like everything is on track now, right?
Correct.
Yeah. In terms of scheduling, you guys are kind of pretty much earliest launching in the Cairo 0, Cairo 1, and yeah, I believe that you hired many talent to your teams. Okay, so but there's the next question is always about the competitive. We always need to always have a question about that. So what is the biggest advantages compared to other competitors, or who is the biggest competitors that's in your mind now?
Okay, I think right now, competitor-wise, there are two different type of competitors. One that are competitors that already exist, and they are, for example, Aave Compound. They are huge in scale, and they have a multi-chain strategy across Ethereum, Polygon, Avalanche, and etc. And other type of competitors are, for example, new lending protocol coming onto Starknet. I think for us, to say the least, that fast transaction and low transaction cost, it's a given because everyone that builds on Starknet will be able to enjoy this common denominator. But for us, I think we actually tweak our design so that we actually take advantage of some of these fast transaction speed and low transaction costs, such that, for example, operations that were not economic feasible on layer 1 or other chains, we will be able to do it quite nicely on Starknet layer 2. This includes we're able to do liquidation at a much lower threshold, dynamic rewards or pool rebalancing, and also later down the line, we can also do recursive yield looping with just one touch of button. I think these are all some of the features that enabled by the cost itself, and also, for example, the native account abstraction that would be able to allow us to do multi-calls, session keys, and so forth. Another advantage is we see that for us, because we have two products under the same hood, and to be able to do institution transactions, that would also require a privacy layering for some more sensitive institutions. And Starknet actually offers layer 3, which is a private Starknet instances that they help to provide a private layering for data availability, so that transactions being done on layer 3 will not share the data with all the other layer 2s. And then in that sense, you're able to mask some of the transaction details. And I think for institutions, that is actually one of the core consideration for coming onto Web3 or coming onto crypto to do transactions or lending transactions. And I think the last one is because the speed to market. We're one of the early, like you mentioned, one of the earlier protocols to launch mainnet alpha on Starknet. Right now, because we are one of the first actual good use cases to come onto Starknet, we actually get real organic users coming on to do borrowing and lending. That's one. And then secondly is we're able to form a lot of very good strategic partnerships. For example, with wallet provider like Arginx and Bravos, ID protocol like Start ID, and also cross-chain strategy like Omni Network, Herodotus. These are all partners that we are able to get a lot more advanced in terms of our discussion, in terms of our integrations, because we have a product out, and then we can kind of be the first one to actually provide a real use cases for, let's say, if we do want to go across different chains, how do we do it, and how do we actually manage it effectively?
Yeah, awesome. Actually, when I tried zkLend for the first time, I didn't see much difference. For example, compound. So I didn't expect much. And I thought that the biggest advantages that we have is the TPS and the cost saving and the upcoming Apollo protocol. But yeah, that's true. It is the TPS and cost saving. But even more than that is enable the opportunities to have the much more kind of efficient liquidate engines, much lower liquidation threshold, pool rebalancing, recursive yield locking, and that's really, really, no, it's extremely important. Everything will be much, safer and from the price fluctuations, and maybe it can be prevent the manipulation of the market as well. So it will really change everything. A lot of people can take advantage from it. Yeah, it's really cool, Brian. Yeah. Okay, so then there's next question that I believe that you have been asked for many times, but because it is a DeFi project, we always need to ask about the security, and because we are responsible for storing the people money. So how much does zkLend take safety is serious, and what is the risk management program that you have applied to the protocol?
Sure. Yeah, you're 100%. Because I think bridging and also lending protocol is one of the most critical and most vulnerable piece of DeFi structure that are quite prone to attack historically. For us, we have four lines of defense. The first one is being the product design itself. We have a number of different parameters, and for example, when we do our lending, or sorry, when we do our borrowing, we actually have a two-side factors where we do one factor for the collateral and then also another one for the borrowing itself. So the collateral factor will assess the market risk of the collateral, and the borrowing factor actually assess the correlation of pricing between the borrowed assets and the collateral. So if, for example, the two goes hand in hand together, the borrow factor can be closer to 1, but if they actually move out of sync, that actually creates a more dangerous environment for us. Then we would have a lower borrowing factor to basically buffer for this market movement. The second line of defense that we have is a smart contract audit and a formal verification. We have done the Nethermind and ABDK smart contract audit, and then we also engage Nethermind to do a formal verifications or formal specification for us to ensure the well-formed of the protocol. The smart contract audit, actually, it's going line by line to look for bugs, look for areas of weakness in your in the code itself, but a formal verification or specification actually look in the entire operations of different smart contracts and how they correlate with each other, and testing against the different extreme cases so that there will not be a point of singularity. And then the third line of defense would be a borrowing cap. When we launch our mainnet alpha, we actually are quite sensitive in terms of how we release our borrowing cap. Initially, we have a 5,000 borrowing cap when we first launched mainnet alpha, but it was filled up within 24 hours. So we increased it to about 15, and then 30, and then all the way up to 150 for some specific borrowing pool. And the last one is a post-deployment risk monitoring. Currently, for risk monitoring, we are working with Hibernative to provide a instantaneous feedback on any potential attack or exploit across the network. And secondly, it's a wallet screening that we're in discussion with Chain Analysis to provide us with a service to filter out any bad players or wallet that deals with illicit funds or sanctioned parties. So these are some of the line of defense that we have. And as we become more sophisticated and the features becomes more full-fledged, we will also need to go back to our product design to ensure that the whole security of the protocol is still sound, and there won't be new weaknesses being introduced by adding on new features.
Yeah, it's great to hear that, Brian. So yeah, I just hear a lot of famous names that you just mentioned. So allows me to introduce some name to the audience here. For example, we have about auditing, we have Nethermind, right? Nethermind is a famous company who focus on Ethereum, and they have an extremely deep understanding about Starknet because they contribute a lot to the protocol security and reliability, and they also be an author of the Starknet client, Starknet Explorer, and we all know about the WAS compiler, right? A product that have to compile the Solidity code to Cairo, and this is also the product of Nethermind as well. So yeah, and about another auditor is ABDK Kansas City, right?
Yes, correct.
ABDK is also a very famous name. Actually, we can call it a legend. It's legendary who auditing for 1inch, for AV, Uniswap, Tornado, zk Swap, zk Sync, and many more. So they are two most kind of relevant name. And you also just mentioned about chain analysis, right?
chain analysis, and also hibernative.
Hibernate is a new startup just launched last year, and but chain analysis is really a big name because it is the official investor for the mid-gauss hack almost 10 years ago. So yeah, these are all the big names that we can believe in. And okay, so about you also mentioned about the cap for borrowing. So is there any plan to remove the cap in the future when everything can be proved that it works smoothly?
Yeah, I think we would want to be careful with that. I think we are eventually looking at removing the cap, the borrowing cap, but I think in the ramp up stage, it would be good for us to even setting a higher cap that will not be reached quite easily. I think it's still better than not setting a cap at all, because I think it eliminates some of the extreme cases where, for example, people might come in, dump a lot of deposits, and trying to borrow a lot of different currency because there were any market manipulations, private manipulations. So setting a borrowing cap, actually, it's an indirect hurdle for attacker to do this very, very easily. I think so. Down the road, when we have the mainnet, I would assume for some of the pool, we may actually remove them. But ultimately, for some of the more fluctuating and some of the more long tail assets, the pool will also still have a borrowing cap on it.
Yeah. So in terms of manipulating, I just saw a question from the community that is quite close to that topic. So there's a question from Solo Hand is, how decentralized is your price oracle service? Could you say a bit about your price, oracle, the price feeding?
Sure. The current price oracle we're using is Pragma Oracle, and we understand Chainlink is going to be coming onto Starknet towards end of year or early next year. So when Chainlink is going to come on, it's coming on, then we will probably include them into our Oracle service as well. But Pragma by itself, they also have a very decentralized network. So they actually takes on real life pricing from some of the exchanges, some of the market makers, and also decentralized exchanges. So then they have a good mix of first party and third party Oracle service provider. And they would be able to, all the computation and all the computation of the pricing, for example, getting the TWAPs and averaging and things like that are actually done on chain. So for us, they are quite efficient and a very good oracle to get started on mainnet alpha. I am not too concerned about the decentralized component of Pragma because I think they have done their homework and they've done their work to actually get as diverse and as decentralized users to actually provide their data to pricing. So in that sense, we don't have one single point of failure for the pricing from the underlying data source.
Yeah. Okay, got it. So for my understanding, in the future, we're gonna have a plan to combine of using Pragma and Chainlink as well, right?
Correct.
Yeah. Okay, got it. So another question that from community that relate to the decentralized. We are mentioning about decentralizing, and do you have a plan? I know that it's too soon to ask it for now, but do you have a plan to make the protocol more and more decentralized, like as adopting DAO?
Yep. Actually, for this point, Jane and I actually have been in discussion quite frequently to try to wrap our head around how do we do it in a more systematic manner. I think at the very beginning, we might not be able to decentralize a lot of the building, a lot of the parameters, because we need to have a good grasp of how the protocol will react to different market situations and being able to make changes quite nimbly. And then I think down the road, we do want to decentralize our protocol. But in terms of decentralize, it really look into what parameters are we trying to decentralize, what part of the operations or governance, we will provide the users to make a decision. I think one easy one will be, for example, getting approval, getting voting for bringing on new assets. Secondly, it's how the reward distribution is going to go for different assets. But I think some of the core parameters like interest rate curve, and also, for example, the collateralization ratio and those things, the decentralization route may not be just dumping the entire voting ability and approval ability and the set adjusting ability to the community, but perhaps we might actually look for external party like Nguyen or some other financial advisory that actually help us to calculate, help us to advise what would be the right parameters to set in, and then once we have that, then we can let the community vote on it. I think that will be a better way to go. As for Apollo, right now we don't have a specific plan for decentralization yet, because it deals with a lot of institutions, and to be able to move forward a lot quicker, it actually requires us to be more hands-on with these institutions on a peer-to-peer basis. So for that one, we don't have a plan just yet, but for the zkLend retail side, yes, that is the way to go.
Yeah, I agree that too much power will of course lead to the collapse. So yeah, the community always asks for the DOA in the future. So good to hear that we all have planned for that. And there's another question from the community. Just is a new one. Does zkLend will support the flash loans in your on layer 2?
Yep. Currently, flash loan is not being supported just yet, but we will have that features in the next coming few weeks. The documentation of it is being prepared, and once that is done, we will release it along in our Gitbook, and then so users will be able to look at the Gitbook and be able to access the flash loan on skipping the front end and being able to access the flash loan and using it for let's say arbitration, or using it as liquidation tool.
Oh yeah. I hope it will be available in zkLend soon. And zkLend will be open source, right?
Yes, we will be open source, but the open sourcing would come after we have the mainnet launch. Once we have all the features and everything released, then we will release it to open source.
Yeah. Good to hear that, because I just asked because with flash loan and open source we are as a builder who can write bots and can execute very like interesting trading scenarios. There's many scenarios that we can use with flash loan.
Yep.
Okay, and regarding to the as a builder and developer, will you kind of expose the API for developer to integrate with the zkLend in the future?
Yep. Actually, right now we already provide our API connection to the front end for a few of our partners. For example, we provided to Yagi Finance, a vault strategy, and then we also provided to Morphines, which is a consolidator of all DeFi rates. So it is something that we have in-house already, and it's not being publicly available on our GitHub yet. But for partnerships, if they do want to integrate with us, they can just reach out to us on Discord or Telegram, and we will be able to provide the right API hooks for further integrations.
Yeah, I see. And you already have a plan to open source too. So when you open the source code, we can be able to create our own API, front-end API to interact with the zkLend. Yeah, and being open source is a good, kind of traditions of the blockchain industry. So if for more transparency and decentralized, and as a builder, we are all looking to what way. Okay, let me move to the next question. I just have too many questions for myself. I'll try to pick it up news questions from the communities. And actually, we have few questions from community a few days ago when we announced about the AMA. We have a Google form for everyone to fill up the questions. So we are already collect them, and I will pick up some kind of math questions. Okay. Yeah, every blockchain project needs a supportive community. So, how is the relationship of the zkLend and partners? And does you are the earliest adopter in Starknet. So, how does Starknet help you much instead of just being an investor?
Yep. Yeah, so Starnet is our investors, Startware is our investors, but aside from money support, they have been instrumental in terms of helping us to get connected to other players in the Starnet ecosystem. And that actually opens up a lot of doors and helping us to form partnerships at a very, very, very early age. So I think for us, for partners, we have three different categories of them. So for example, we have product development and integrations partner. These would be including some of the top leaders in the industry, including, for example, wallets like Bravo and Argent. We have a great partnership ongoing with Nethermind, and we're hosting an event with them next week in Vietnam, and we also host one with them last year in Singapore as well. StartScan, it's also a core partner of us. Pragma Oracles, Morphines, Yankee Finance, and Carmine Finance. These are all great DeFi protocol that are able to build on top of us and being able to also refine our security of the protocol through, for example, Carmine using options to protect against bad debt. And for risk management partners, we have Hypernative and Chain Analysis. And for marketing partners, we have, for example, guys like Stark ID, Break, and Ducks Everywhere. And then I think some of the followers might have seen that we have a Send Ducks giveaway about 4 months ago. And that was a really good event to basically give reward to some of our early adopters, early users. As for the community within zkLend, I think right now we're at a pretty good spot. We have around 46,000 followers, and a lot of them actually are very engaging into a lot of our campaigns. For example, we mentioned the moon landing campaign when we launched testnet, and then when we launched mainnet alpha, we had the LP launch lotto, which we received over 1,500 valid wallet address coming in, and actually more double of that for people participating but didn't get chosen, or didn't end up getting a valid deposit or borrowing. And then I think for us, these are all great partners because we're able to galvanize the community at a very early age. And I think one of the core things for Starknet is that because a lot of the different protocols are trying to hone their skills and trying to expand their protocol in, for example, for Brick, they're doing NFTs or doing quasi fungible NFTs. So their community is actually very supportive in terms of the NFT space and also gaming space. But because Starknet is still growing and it's very strong in terms of its culture, so that supporters from other protocol actually turns out to be supporter of our protocol as well. And we actually keep growing the whole community space for Starknet from day one, and being able to get a good traction whenever we have a campaign. It becomes a cross protocol campaign, and then we would be having marketing with, for example, Bravo Wallet. We would be having marketing campaign with Start ID and so forth. And I think that it's something that it's not being commonly shared with other layer twos or other blockchain as a whole.
Okay, got it. So I can see that you are making good use of your advantages as a first mover to the Starknet. So yeah, and I also found a really interesting questions from community. That's it is quite a, I think it kind of misunderstanding about zk proof in zkLend here. So I think you might want to clear the misunderstanding about by yourself about for all the audience about this thing for everyone who have the same questions. So the question is, could you share any potential use case of zero knowledge proof within
Mhm.
zkLend, and how the technologies could be used to enhance privacy or security of transactions on the network?
Sure, sure. I think first off, CK rollup, especially Starknet, CK Sync, they actually use CK proof not so much for the privacy side of things. They use it for the scalability. It's basically the batching of transactions and being able to generate a proof of the batch in one go. So for us, we actually leverage on the technology that Starknet provides. But within a protocol itself, we actually do not need to use a zero knowledge proof for lending and proving. And I think even for the privacy part where we actually to make advantages of the layer 3, that actually also it's the underlying tag that supports it. And then for zkLend, we don't actually touch the CK proof itself. But having said, I think the CK proof and also Starknet enables a lot of different features which would be very, very relevant to us. One of which would be wallet account abstraction, where a wallet would be a smart contract rather than a EOA. And what that means is each smart contract, each wallet can be programmable. And then so you will be able to do transactions, not just a simple signing transactions, but you can also do a multi-call where you would be able to do a series of transactions with just one signing. Or you would be able to do session key where you approve transactions for the next 1 hour and then you don't have to sign after that. Or you can do, for example, things we want to have in the future, which is, let's say, one-touch recursive yielding. And what that means is for new farmer, if they want to keep duping one single currency to maximize the yield, they don't have to sign multiple transactions, or they don't have to do their own bots to do the transactions themselves. They can actually use native account instructions to have multi-call and do it in one single go. So I think these are all just scratching some of the ability that Starknet enables. And I think we are still at a very early stage. It's only 2 years since Starknet actually becomes in production mode. So in scale of things, it's still a young baby. And to be able to understand, we kind of know some of the features that will be able to come to fruition. But I think the true potential of it is still being uncovered by different builders and different developers to come into the ecosystem. And I think for us, I would say for us, it's relatively straightforward. Lending protocol, it's quite bread and butter. So we want to build something that is fundamentally easy to use, easy to build on, so that when Starknet scale, when more developer comes on with cooler, more innovative stuff, they will be able to build on top of us and make use of us. And then we will be able to get scaled this way.
Yeah. I totally agree with you, Brian. And yeah, as a DApp, the advantages that we take is normally about the scaling ability of the that we achieve by zk proof. This is about the TPS, it is about the cost, but we do not touch so deep in the zk proof. It is about is from the protocol, is kind of the infrastructure things. So yeah, it is a misunderstanding that maybe many audience have, and yeah, it is time to clear it. And next thing is the question from myself before I move to I am in the question for myself is I very interested in the Apollo protocol, and for me it is a kind of game changing. So could you share a bit about any information that you have in your mind? Maybe it's not on behalf of zkLend, but just as a personal.
Yep.
Yeah.
I think institutions, it's unlocking institutions access will be the next game changer for Web3 adoptions. The client acquisition cost is getting higher, and I think we're plateauing in terms of how much money each user is able to bring on. So institutions is the next piece of the puzzle that actually get the next billion of users and get the next trillions of capital to come onto Web3. For us, building out Apollo actually comes in 3 phases. The first phase, we imagine it to be a single borrowing pool which is accessible only by institutional lender. The second phase is single borrowing pool accessible by institutional lenders and also KYC retail lenders. So by doing that, we're able to combine both the capital pool of retail and institutional users. And the last phase would be we want to have commingled pool of different borrowers to provide a borrowing pool that is accessible to both institutions and KYC retail users. And with that, basically that means it's similar to a traditional finance where we're able to issue bonds, but the bond issuer is actually a pool of different issuers around the same rating. So what we ultimately want to do is we want to create a lending or a debt marketplace which combines both private and public debt. And the private debt is enabled by L3 or layer 3 or private Starknet. And ultimately down the road for institutions, I think real world asset collateralized lending, it's something that probably will come in the next 2 to 3 years. And with that, I think it actually opens up a lot more doors in terms of how you securitize, let's say, treasury bonds or securitize corporate bonds or any other securities in real world, and then having that in tokenized form and being able to transact and borrow against that on-chain. I think that will be a real game changer for the actual DeFi space going forward.
Yeah, I believe that it's not only the game changing for the money market, but for the DeFi as well. It's always be difficult to connect the real world assets with the on-chain product. And I hope that with your experience you have experience on working on Bloomberg, Stanchart, and many TradFi companies. So I hope that you have to set up a good background for understanding of the regulations, the policy, or licensing something to do something like claiming bankruptcy or enforcement real estate. And yeah, really hope that we're gonna have it in the future. Yeah, and after that, I will give the stage to my co-host Nicole. Thanks, Brian. Thanks so much for all the answer.
No, thank you so much. Really appreciate it.
All right, thank you guys, and thanks everyone for joining. What is your favorite question for tonight, Brian? Or let's say, what is the most tricky question?
The trick question. I think one question that I actually like, and I have the opportunity to clear it up, is that that zkLend itself, it's not using the zk technology itself, because a lot of people actually would have very high expectation of us and thinking that, oh, zkLend, they have the zk technology, zk proof technology within, and then how you do like crazy private transactions, and then you will be able to mix the transactions in-house and using it as a privacy layering. Yes, we do want to do that, but I think that's the beauty of using Starknet. We don't actually have to understand the nav and understand the full tech. Well, at least I don't have to understand as a business co-founder, but my CTO would understand 100%. But for us, being able to abstract all these technical challenges and technical difficulties and details, and being able to use it on a more logical business sense, it's something that is really great with the entire modular blockchain infrastructure. So I think this is a great question for me to clear it up. And then I think it's also a good reminder that for everyone to come onto the Web3 space, I don't think you actually do. It's not only developer that it's the only core player that push the space forward. You also will see that there are different players coming in through marketing, through business, through TradFi background like myself, and being able to make use of the technology to service other normies like myself. So I think that's something that I enjoyed explaining, and something that I enjoy doing.
Okay. I saw someone from the audience who might have raised a hand. If you want to speak up, then do let me know. But I guess what Brian has mentioned is actually also one of the key takeaways for today, I guess. So that might be one of the key messages that, you know, people would keep in mind when they build, you know, on zkLend or they use your products later. So I guess like clearing the expectations on one hand might help open up, you know, opportunities on the other hand, and people actually know what is the best value, what is the best feature that they can build on zkLend. So I think that has nicely wrapped up our session today. Again, thank you so much, everyone, for joining, for tuning in. I know it's a little bit late in Vietnam and also in Hong Kong as well. So thank you guys for staying up this late with us in this session. We promise more exciting session as well from now until Doodle, and looking forward to seeing some of you here and Brian and Manh as well at Doodle Vietnam next week. So for those of you who want to make it here, I'll see you in person, and looking forward to you know, our next sessions, our next AMAs. Again, good night, everyone, or good morning, everyone. Have a great night, have a great day, and we'll see you in the next sessions. Thanks, Brian.
Thank you,
Thanks, Manh.
everyone.
Thanks, Nicole.
Thank you,
Thanks,
Nicole. Thank you,
Brian.
Manh. Really appreciate it. Enjoy
Thanks,
it.
guys.
Thank you.
Enjoy.
Bye.
See you.
See you. Okay. Do join our Discord channel, you know, with ABC Station, so you can share some recap and information after this, and also Brian's presentation, you know, if that's possible. We would love to kind of revisit this afterwards. I think when my brain is a little bit clearer.
Of course. Sure thing.
All
right. Thank you so much, guys.
Thanks, guys. Take care. Bye-bye.
All right.
Enjoy. See you. Good night.
Night.